Hey y'all, it is AMTrades, and today we are going to be going over the weekly outlooks for next week. It will be the week. Let's see here. So next week, March 31st to April 6th of 2024, and we will also be going over my trades over the last week. So yeah, let's get into it. So we're gonna start with our news outlooks for the week. We have okay. So Monday, April 1st, 10 a.m. ISM manufacturing and manufacturing prices. So Monday will be a good day to trade as we will have volatility in the markets usually, especially after a bank holiday like today. It's Good Friday. There usually is like little to no volatility, especially in the S&P and in the Nasdaq, which are the two pairs that I trade. Well, not pairs, but two instruments that I trade. So Monday definitely will be trading. Same with Tuesday. We have, but that's on the condition that we wait until 10 a.m. before anything, to let news come out and for that reaction to be had in the market. And then moving on, we have Tuesday, JOLTS job openings. We'll be seeing as well as a random FOMC member speaking. So because it is not Powell speaking, I will still be open to trade that day, and this is also later on in the trading day. So again, we will be trading Tuesday. We are just waiting for the JOLTS job openings to come out and let price develop a little bit. And then Wednesday, we have non-farm payroll, ISM services. We had ISM manufacturing on Monday, and then Wednesday we have services. So this will be kind of the opening to the month news cycle, and then of course we have non-farm employment, and the next week we should have nothing. Never mind. Yeah, so non-farm employment, and there it is. ADP non-farm employment change as well on Wednesday. So Wednesday I will not be trading only because of Powell speaking at 12:10. So right as the news break happens in New York, and Thursday, sorry, we will be trading unemployment claims, Barkin speaking, message speaking, whoever those are less impactful in the market than Powell. And so Thursday we'll be trading, and Friday we will be trading. We have non-farm payroll or employment change (NFP) on Friday. Of course, we'll be letting that come out. That's an hour before market opens, so we should be fine at 9:30, as well as unemployment rate and average hourly earnings month over month, which I haven't seen in a while. I have to figure out exactly what that is. I have an idea, but okay. And then moving on to the charts. These last couple of days. Hold on, let me mark out the last week in price action. So it's Thursday. Of course, today was a bank holiday, so we did not have. Sorry, I'm on the wrong time frame. So we did not have as much price action this week, and also there was no price action because markets were closed today. So if we go to Monday, so this is this week's price action. No, sorry, this is this week's price action. So as we can see, we had an okay week. We had this tap into this fair value gap here. Let me just find my GAN box. Here we go. So we tapped into this fair value gap. Of course, we are bullish, very bullish, even if we just look like crazy uptrend. And so we had this reaction to the fair value gap, came and hit equilibrium, didn't hit the golden pocket at 0.618 Fibonacci, but we did see a swift reaction off of that. But if we go into the lower time frames, especially on Nasdaq, but also on the S&P, we can see that price action was really choppy this week. This price action is not very tradable. So I did actually have quite a bad week, down 4.5% on the week, and the week before that, I haven't been updating you guys very much because I have been away these last couple of weeks. But the week previous, so last week, I had an 8% gain. So I had, I think, 3 winning trades for an 8% gain, and that actually pushed me up a couple on my prop firms, that the challenges that I'm running at the moment. Um, just trying to accrue more capital. But onto the S&P here. On the hourly, especially around market open each day. Let's see here. It's at 13:30 now, London time, because of daylight savings. But if we mark out each 13, oh no, that's Friday. Sorry. Going into Monday, you can see that we didn't really have that good of price action here, especially on Monday, Tuesday, and Wednesday. We had news, I'm pretty sure, because there's that candle is quite large. So let's see. Yeah, so I would trading Monday, Tuesday. I traded Wednesday. I traded Thursday. And I didn't trade, of course, not Friday. So I traded all this week. I had 3 trades. Let me see here. I had, how many did I have this week? Okay, 3 trades this week. And we had 3 losing trades. So the first trade I took this week was on Monday, where I had 2 trades for 2 losses, and they were both long attempts, and I got chopped up. So let's see here. Let me see if I can remember what the trade idea was here. So I believe that I was taking, see, but like if you look at this whole range here, like this is not tradable price action. I'm on the 5 minute. I'm not even on the 1 minute. And look at the wicks here. Like this is terrible. So I ended up trading this week even when I knew that there was unprobable conditions, which I think is definitely one of the big things that led to this week being so bad and my executions being bad. But I did follow my rules in terms of executions, which I'm very happy of, and that even though I'm down 4.5%, it hasn't affected my mental. So actually, upon losing that trade in PM session on Thursday, which I will get to, I was just I wasn't emotional about it because I didn't let the emotions affect the way I was executing, which is what I have to do. I can't let any of that affect what I'm actually doing on the charts. But I kind of felt more emotional than I usually do, especially on a losing week. I think it's probably because the week before I had such a profitable week. I had 3 winning trades and no losses that week. So I didn't become overconfident. I wouldn't say that, but I do think that I had kind of I had a reaction to this losing week, which I think is not great. But we live and we learn. I'm going to be kind of recouping and going to the next week. We are going to be a little bit more picky and kind of learn from what we've learned from our losses from this week. So yeah, again, here very choppy price action. I did not trade PM session, as well as all of this week. I had very bad access to a Wi-Fi connection, so when I was trading, I was trading kind of weird times, which also likely affected the setups that I took. And I was also kind of, I wouldn't say forcing setups, but I wasn't being as picky as I usually am with my trade setups. So again, this is AM session on Monday. Terrible price action. Even though we had news, it should have brought a little bit of volatility, but it was just super choppy. So I got chopped up, took 1 loss here. And then Tuesday, this is where we saw the tap into the fair value gap here. We saw that price literally just consolidate. So this is market open. Literally just consolidated all the way up until the lunch break, which would have been around here until here. And then as soon as lunch ended, we saw the huge dump, which was likely based off of the reaction to this fair value gap after all of these equal lows were swept. So we saw all of these get swept. Reaction, bullish fair value gap reaction. There was also an order block here on the 5 minute. So we came up into here after sweeping all that liquidity, and then we wanted to see a move down, especially after respecting this fair value gap here, and it was also a 15-minute fair value gap. And then we had respecting this fair value gap as well, and then came up into this order block, and then we saw but this is all consolidation, so you can't really analyze this. But here, end of lunch break, PM session start, we saw the dump, and then this is where the trade idea was for that day, and then the rest is just chop, right? So, and moving on to Wednesday, market opened right here, and just an immediate dump, which was not ideal. And then we literally just consolidated the rest of the day. Actually, this is where I took. I remember this trade because this was only 2 days ago. But I tried to take a long off of the, where was it? I think it was this 5 minute for value gap. I have my stops below here. Actually, I'll have to go lower on the 1 minute and see exactly where I executed. But here I took longs off of the 1 minute because we had all of this liquidity get swept super swiftly off of the AM session right here. So all of this, these lows, and we were also forming SMT with the NASDAQ. I actually took longs on NASDAQ, not. Okay, here. So I tried to take longs right here. I entered. It stops below here. I was wanting to take profits off of all of this engineered liquidity. This was my drawn liquidity. Let me find the trend line here. There it is. So this was my drawn liquidity, this engineered. And I did not see price going any lower because if we go up, we can see we already had a sweep, right? So we had a sweep, and then, well, not those, I placed around here. And then we flipped to bullish order flow right here, right? So we wanted to see a continuation, especially after that AM session sweeping all those lows. Where is it? Right there. And then I wanted to see longs up to here. And what happened is I got tagged in on this 1 minute for value gap. I was looking for a golden pocket of this range. So I was looking to get entered at the 0.618, and I did. Stops below these lows here. And as we can see, we had, oh no, it was a bit later. It was here. So we got tagged in perfectly. Stops below here. And obviously I was looking to ride it up to this. This would be TP2, and right here at this level would be TP1. And this was obviously all going to get ran out. Like, this is pure engineered low resistance liquidity. So, and this higher time frame bearish order block because we are bearish on the day, right? Obviously because of that morning. So took longs here. We could see that we had a nice reaction coming up into, we ended up engineering more liquidity, and then this 1 minute fair value gap got inversed, and I got wicked out before seeing the actual move all the way up to TP2. So obviously this, I did get stopped out. I did get out of my trade, everything, right, as I should follow my rules. But seeing myself get wicked out like that, especially on a week where I hadn't won any trades, and then seeing like such a reaction in the direction that I had wanted to, right to the draw of liquidity that I wanted it to see, that was definitely hard on my mental, because I just kind of, as I was watching that price develop, was like, it was bad. But I didn't let it affect any of my executions, and I knew that I stayed true to my rules. So I think that's the takeaway from that trade. But going into next week, let's just find our weekly outlooks here. We have, obviously we are in a downtrend. This is an FOMC candle. So we had FOMC. Oh, I also wanted to mention that here we had bullish SMT. So as we can see here, we did come into this fair value gap to kind of balance price action on the S&P, but we only really came into the 50% mark, whereas here on NASDAQ, we came lower and we never got a reaction to the upside like we did here. So this low, I'm pretty sure it's that low, it was swept on NASDAQ right here, but it was not swept on the S&P 500. So that is somewhere, this is another reason why I was looking for longs. So I'm still bullish going into the next week. of course, we haven't seen that reaction yet, but there's also a 4 hour fair value gap here on the NASDAQ that we saw another SMT form. It wasn't here on the sorry, on the S&P. We had it on the NASDAQ. It did not form, but this has, I want to see this get reacted into the next and see this 4 hour low get swept. And then I'm looking for longs, especially because we didn't see anything here. It's very imbalanced right now. So obviously up to here, and these 4 hour equal highs are my like very, very much drawn liquidity. This is where I was trying to take profit to. This is where I was trying to catch the move to all week, and it never got swept. So as well as this, oh no, that got swept. And that didn't appear here on the S&P because we are obviously much higher in price than we are on the NASDAQ, right? We are all the way down in this range, and the S&P has already swept it all the way. So I need to see this get corrected and this come up, and that's where I'm going to be looking to trade into this next week. Hopefully they aren't. Hopefully those are taken on. I think they'll probably be taken on Tuesday. Then Monday will probably be the low of the week. Just because there's no reason for us to keep going lower in price action. We had this sweep here, and just this really choppy price action for the last couple hours. Same on the S&P, but I want to see this get left as it's usually weaker than the NASDAQ, and the correlation is very much off at the moment. So yeah, that's pretty much all I wanted to speak about today. Also, that TFT is likely down forever, the funded trader, which is definitely interesting for the space, especially after all of the account migrations and the bans from meta quotes. I think it's not looking good for the prop firm space, but we'll have to see. We'll have to see what happens. As well as a lot of the white labeled firms. So Swaggy C's Chase the Bag firm, which is a terrible name for a prop firm, but all of the white labeled firms that Eastern has like provided to traders and given, as well as skilled funded traders. So Words of Wisdom's partnership, as well as Paladin and Omar Agag, they are going down as well, which is very interesting. But that's pretty much it. I'm going to be focused on that as my draw on liquidity. I am bullish, and before I see those highs get swept, we are definitely going to see a tap into this for value gap kind of deeper, just because we're so low in price here, and there is news. So yeah, and then this is all low resistance liquidity going up here, and we're going to be looking executions on the 5 minute and 1 minute. We're fine to see our move up to these equal highs to get ran out. And then yeah, so trading Monday, Tuesday, Wednesday. Oh no, that's last week. Sorry. Monday, Tuesday, not Wednesday. Monday, Tuesday, Thursday, Friday next week. So every day except for Wednesday. And yeah. Also, we can look at crypto as well. If we go to, where's my Bitcoin? Here it is. Okay, so we are at around 70,000. Need to go up a little bit here. 70,000 on Bitcoin. Of course, we saw the move down. This was the retrace. It retraced about price range from the high. Retraced about 17%, which is completely normal for crypto, especially right now we're pre-halving. So if we look at the weekly as well, we haven't seen a close above all-time highs yet. It has only been wicked out. If we look here, it has only ever been wicked out, and this is the current week. So if we can see a weekly close above, following the move down that we saw, I'm very bullish that we're going to move up to 74,000 all the way up to 85,000, as that's going to be where the resistance is. Because in crypto, kind of smart money concepts don't work as well. It's more support and resistance and key levels, just due to the way that the market moves. It's very different. And obviously, as soon as Bitcoin cools down a little bit around 80,000, I want to see Ethereum move back up all the way to its all-time highs, and then we're going to see our altcoins move up quite a bit. But yeah, that's definitely what I'm very, very bullish in the next year in crypto, especially post-halving. So yeah, that's it for today. I will probably also, yeah, appreciate all you guys for watching. Another video tomorrow. I'm back. I promise.